Welcome to the Morgan Report Weekly Perspective, where we don't sugarcoat, we dissect. The S&P 500 wobbled, the Nasdaq snapped, and the Dow staggered, all signs that Wall Street is starting to realize the Fed can't have it both ways. You can't prop up a $36 trillion debt monster and simultaneously fight inflation with toothless rate hikes. The market wants a dovish Fed, but it also wants sound money, and that contradiction is about to collide like a freight train with reality. Bond yields are whipsawing as investors try to front-run the Fed's next move. 10-year Treasuries flirted with 4.7%, which sounds healthy until you realize Uncle Sam can't afford high yields without risking a sovereign debt spiral. Translation: the bond market isn't a safe haven anymore. It's a time bomb. The White House talks climate, but then taps the Strategic Petroleum Reserve like a vending machine. If Trump returns with drill, baby, drill 2.0, expect short-term price suppression, but don't be fooled. Long-term underinvestment in oil production guarantees one thing: $100 oil is not off the table. And here's the punchline: while everyone's focused on Middle East flare-ups, the real shock will come from a supply-side crunch no one sees coming. Precious metals, the heartbeat of truth in a manipulated world. Gold flirted with all-time highs again. But don't let that pullback fool you. Central banks are still buying gold with both hands while retail investors are asleep at the wheel. Silver is quietly explosive. But here's your contrarian alert. The industrial versus monetary tug-of-war is nearing a snap point. With solar demand and military usage climbing, the supply deficit is no longer theoretical. It's now structural. If gold is insurance, silver is a leveraged call option on monetary chaos. And friends, the chaos is already here. So what's next? Expect a false sense of calm going into next week. But underneath the surface, liquidity is drying up, debt ceilings are fiction, and the Fed's balance sheet can't shrink without triggering another banking accident. Here's your takeaway: this isn't a dip to buy. This is a distortion to escape. It's time to get real assets, not paper promises. This is David Morgan with your weekly perspective, and remember, the world doesn't run on promises. It runs on energy and metals. Subscribe, share, prepare.